Risk Management, Rachel Ziemba, Adjunct Fellow, Center for New American Security, and Senior Advisor at Horizon Engage, and Yasar Al-Malki, Gulf Analyst at MEIS. Thanks so much, everybody, for joining us. It's been a busy news week and lots to talk about. Anything apart from the energy markets, really, because Arne, let me go to you first on that. Despite all the headlines we're seeing, both here in the region, in Europe, we continue to see headlines on Ukraine and Russia, etc., in regards to energy impact, and yet all calm on the energy front in terms of prices, in terms of flows. Your business is very much to do with hedging against energy risk. I mean, is there any risk out there at the moment?
Yeah, that's our problem. Clients seem to think that there's no risk out there, and to a certain degree, they are, of course, right. And the market is a kind of cynical, right? That there's a war going on in the Middle East. That's terrible, but there's no oil involved. Yes, the Iranian president crashed in an old helicopter, but it will not really change anything. And furthermore, there hasn't been any of these. This is to blame on Israel or anything. I haven't seen any of these stories from, at least from official stand. So this is an accident, and that happened, but it will not change anything. Is there any risk out there? I still think there's a refinery story in Russia that we should keep an eye on. We still have a Red Sea closure, but things are a bit calm, and maybe the market has become a bit too confident, a bit too laid back on risk, but it will not change tomorrow, I guess.
Yeah. Okay, thanks, Arne. Thanks for that. Yes, let me go to you on that in terms of a calm sort of market. Arne did mention now Russia. We have a headline on our bulletin today which mentions gasoline. It's going to lift its gasoline export ban that it had previously imposed. I mean, does that particular thing have any impact on global markets? Is the market waiting? Was the market waiting for that? And what else about, obviously the fallout of Russian refinery impact from the Ukraine attacks? There was some less supply from that. The refineries recovered, but that's still an open risk, isn't it? How nervous is the market about that?
Well, thank you again, Diala. Yeah, I mean, what we have seen over the past a couple of months, with Ukraine intensifying its attacks on Russian refineries, is that the refinery intake in Russia has become somehow a cyclical loss and recovery, or went on a cyclical loss and recovery pattern with every attack. So the Russians are good at utilizing their spare processing capacity, plus quickly restoring operations at damaged units. This is what they have been doing. But that does not mean that, they could bring that capacity quickly. There is a lot of it that has been lost due to the attacks. Now, what we have seen in recent months is that they like to re-divert crude to exports. And this is why they are maintaining strong exports, especially to China and India in terms of crude. But to go back to your question, which is on products, usually Russian products go to Middle Eastern markets like Fujairah, or even to African markets, and from there they get redistributed to places in Asia and Africa, or final destinations. Now, is the world waiting on these gasoline exports from Russia, or even middle distillates? Not really. What we have is a problem with weakening margins in the refining sector. We have a bit of an overhang. We also have refiners across the board in Asia and Europe and in the US underutilizing their capacity, because we have a bit of a light heavy problem with the grades as well. So it's not as a big factor as it used to be, maybe. But also there will be markets for it by the end of the day, and it may dampen prices even lower.
Okay, thanks, Yasar. Rachel, good morning. I mean, dampen prices even lower. We seem to see that prices are pretty calm, steady. From a US point of view, as we get closer to the election, of course, and it's one of its concerns always is that gasoline number is always, at least sentiment-wise, has an impact, doesn't it, on the messaging that the current administration can give the public on the economy, etc. Any qualms there from the Biden administration that there is a risk to prices going up and therefore hitting gasoline, hitting people's pockets?
So definitely, I think plenty of qualms, right? And I do think that this administration does really believe that, that gasoline prices, are a concern for the population. Maybe they overly focus on gasoline versus other costs that are going up in people's pockets. But I think that if anything, looking out that, we've seen a bit of easing up on Venezuela, right? A move towards sort of one-off licenses instead of the overarching. I think right now versus maybe even a few weeks ago, there are probably a few less qualms. But we did see this also feeding through into concerns from the US about the Ukrainian bombing of energy infrastructure. That wasn't just about oil and gas prices globally. That was also about concern about what infrastructure the Russians might hit back about. So I do think that's there. But I think if anything, they're also just concerned about trying to de-escalate on a variety of fronts. And at the same time, they're really trying to have this message point, and we saw that with the tariffs last week, about the success of industrial policy, the excessive sort of US trade and the industrial story. So I think we'll start seeing them focus more on that. On the Russian point that I think both Arne and Yasser sort of highlighted quite well, if anything, I think we're sort of seeing that those impacts were a bit dampened by the fact that distillate demand and diesel demand has been a bit soft, right? Some of this has been about an electrification story, perhaps even in places like China. So if anything, not only did we see the Russians pivoting to trying to sell more crude oil, they've been only partly successful in that, in my view. But we also saw, if anything, perhaps some cyclical and structural factors that maybe dampen that impact on the feed through to the global economy. But ultimately, I think we're seeing this story of somewhat sluggish demand and still restraint, particularly on the OPEC side, and no immediate sort of new challenges sort of out of getting supply out of Iran and some of these other sanctioned jurisdictions.
Yeah. Arne, just to talk a bit about economy, I mean, let's talk a bit about the US economy, and we'll talk about China as well. But I mean, on the rates, the interest rate risk, if you like, again, the risk of that is bringing to energy markets, or thinking on obviously the impact that'll have on demand. We're now seeing a very clear signal from the Fed that we're going to get probably one interest rate cut, if that, this year. There's no time left for anything else. That's kind of reversed the thinking a bit of the last few months. And of course, that has an impact on demand, on energy demand, etc. So, Rachel mentioned the US economy, gasoline is one factor, but as she also said, that people, are more focused on how much of their vegetables and their other items. And we do hear a lot of evidence on the ground that is pinching people's pockets, despite what we're seeing on the stock markets and the US economy as a whole. So what is the sentiment at the moment on US economic health, if you like, and what that means for rate cuts, etc.?
Yeah, I think start with the inflation fear.
Yeah.
If you go and ask Mr. and Mrs. Jones, there's one thing they can relate to, and that is the price of a 1 gallon on gasoline. And that's why they are so focused on gasoline, because that's one price in the economy you can relate to. I think the issue for the Biden administration is, of course, that people can also see the inflation in other goods they are buying on a daily basis. But historically, gasoline has been sort of the inflation indicator, number one. About the economy, I think it's also important to relate to investor flows. That's quite a big impact short term. And yes, there's only like price 1.5, two rate cuts now for this year in the US, but we're still moving in that direction. I think the market's still buying into the narrative that Powell put forward, that they have no plans if inflation doesn't go ballistic to actually start hiking rates again. So you still have an investor sentiment where you should buy what you call duration. You'll buy bonds, you'll buy IT stocks, tech stocks, everything that will benefit from lower interest in the future. And in that sensitive oil is a bit left behind, because oil is growth here and now. And of course, with interest rates are about 5%, it weighs on growth with a sort of, let's say, weakish implied demand figures, for example, in the weekly US number. There's a narrative brewing here that maybe the oil market is not that strong. The International Energy Agency is talking about they actually revise lower their demand forecast. So you shouldn't really buy into anything that is growth here now, and oil is in that camp. What you're buying into then is actually, if you want to go for commodities, is actually copper at the moment, and metals.
Yeah, I was going to say commodities. Yeah.
Copper is going ballistic, and that's quite interesting, because if you're an investor and you buy into a more broad basket of commodities, then you will automatically buy into oil as well. But for now, it seems like we're going from a situation 2-3 months ago where people were rushing into oil from an investor point of view, speculative point of view. So they've actually been leaving the market the last 3 or 4 weeks or so. So yes, the US economy is slowing down. You can also see in the labor market report there's not that many jobs being created. I think the ISM indicator last week was on the weak side, so things are slowing down, and of course takes some pressure off the oil market.
Yeah, okay, very interesting, and I'm glad you mentioned the commodities, because those have been rising, those base metals, etc., and oil has been left behind for the time being. Yasar, of course, I mean, your oil is being also just supported simply because of these OPEC plus cuts, right? I mean, without that, it'd be much weaker and being left even more behind, clearly, obviously from the demand equation just being moderate rather than strong at the moment. I mean, we are in a situation now where OPEC plus simply has no option but to keep those cuts in place, right? If they want to keep those prices in the 80s. I mean, that's a foregone conclusion for the remainder of the year.
Well, I mean, it looks more likely than maybe beginning of the year or few as Arne said a few weeks back, because when you look at it, since the beginning of the year, we have a price gain of 10%. Maybe that is in part because of the OPEC plus supply cuts, but the sentiment has changed in the last few weeks. Again, as Arne said, because we are looking at the supply overhang and also soft demand expectations. So there are major factors that are impacting the decision by OPEC. And again, this is something I think we said since, every time anybody asked about what would happen at the June meeting, they will look at the data. They will look at the expectations for what is going to happen in the second half of the year. So there are major factors: continued concerns over economic growth, slow inventory depletion, weaker refining margins, as I said at the beginning, and strong non-OPEC supply. Now, these are all pointing to a cautious approach to unwinding the cuts, later this year or perhaps even early next year. And at the same time, you have to look at some of the issues that OPEC itself wants to deal with internally, and that is market share and quota concerns and capacities and so on. So what OPEC will try to do in the upcoming meeting in June, is they are trying to maintain their consensus. One issue is to look at the market share concerns. Given that non-OPEC supply is high, Russian flows have been undeterred to China and India, which are key markets for many of the Middle Eastern producers. The other thing is to look at the results of the capacity audits that is going to be, that is being conducted by external auditors. And you have countries like Iraq and the United Arab Emirates who want to have, higher quotas based on their capacity gains. And, this places OPEC in a place where it has to decide, if we are going to give these countries more quota, what does that mean? We are going to increase our production next year. Do we have to move quotas around, between other members, and this is going to cause friction? So, and at the same time, they have to ensure compliance by members, especially Iraq, and Kazakhstan. These countries have provided a compensation plan. So there are so many things happening. But, if you ask me, I think there are preparations ongoing. And I wouldn't be surprised. I wouldn't, discount the fact, maybe that we are going to be preempted by some announcement, a few weeks before. I mean, a few days before, and we don't know if it's going to be virtual.
We did hear. Well, we've heard it's going to be a virtual meeting first of all, and which you know, one of our commentators last week tells you that they don't want to be in a situation where they're being faced with too many questions physically. There's a lot of considerations, like you said, all those things, the quotas. We did have Iraq being quite outspoken recently about what it wants to do, etc. I mean, do you think that no matter what they decide or come out with, even if they come out with some indication on future volumes, different quotas, let's say for some members such as the UAE and Iraq, that will not be in any way to be implemented before next year? I mean, we're not looking at any changes before that.
My understanding is that the capacity audit process is going to determine the quotas for 2025 or the required production levels then. The more immediate decision is whether we have all of these voluntary cuts, you know, by 8 members, around 2.2 million barrels per day. Are we going to extend that into the second half of the year? So that is the more immediate decision-making, you know, policy to look into. The more, you know, let's say medium term is looking into next year. So the capacity assessment should be, well, you know, last year they said it should be done by end of June. I think Bloomberg was reporting something that, you know, OPEC has asked the external auditors to send in the assessments in a week's time, or, you know, that was a couple of weeks ago, I think. So so it depends. I think this is an ongoing process, ongoing discussion within OPEC, and you have to look at the merits of the external audit process, Diala, because, you know, back in the day it was all about, you know, how much power you can wield inside OPEC and trying to convince other members, you know, to you know, this is my capacity, this is my quota, this is my reserves. But now I think this is quite a neutral process that, you know, OPEC has implemented, and this has advantages. It will make things more transparent. It will make things easier to reach consensus on, because you have 3 big, you know, external companies looking into this.
Yeah. Okay, thanks, Yasar. Yeah, thank you so much. Yeah, they are refining that process, aren't they, as they go along, as it becomes the model on how they're managing their volumes in the market. Rachel, back to you. Let's get your point of view on. I mean, we've had a lot of news this week. We had the fateful crash in Iran. I'm not going to talk about that, except that I wanted to ask you about, you know, obviously there's a process now whereby they're going to have to elect a new leader in Iran. Would the US be, I mean, would the US be looking at that as any change in policy from Iran itself? Probably not, but I'll get your take on that. And I want to get your point of views also. We have an article today that addresses how Biden is losing Democratic support, funding, donors' support, because of his policy stance towards the Gaza disaster. And of course, in light of the ICC recommendation that came out overnight, all of that put together, just the question to you really is, you know, is Biden in a bit of a fix now? Everything doesn't seem to be going his way reputationally in terms of how the US's stance on the Middle East problem here, and how, if at all, would he change his approach?
Yeah, so let me take the first part, you know, first, sort of talking about Iran. Maybe it seems a little bit simpler. Yeah, I think that the US will be, like everyone, will be watching closely how this electoral process plays out, how the Iranian authorities, both the IRGC, and the clerics and the Ayatollah, how everyone responds in this sort of stressful period ahead of the elections. I don't think many people expect meaningful policy change. After all, it was the National Security Council, it is, you know, the IRGC, it is other actors that had really been involved in sort of the nuclear program, support for regional players. It wasn't really the president's, you know, sort of role, or even the foreign ministers. It's not to underplay their importance on the margins. And in fact, arguably, Raisi himself was relatively unpopular, and we sort of saw that in some of the recent legislative elections. So I think that the U.S. in that context will probably be reactive rather than trying to forge. But look, there was an element where I think some people were surprised to see the U.S. and the Europeans and even NATO issue condolences to Iran yesterday. So I think the U.S. is open. They want to keep sort of talks going. They would like to, this administration would like to go back to the table on something like a new JCPOA. That's not going to happen in the coming months.
Yeah.
We'll see what happens under the next administration. So look, you know, Biden is facing a lot of different issues, the economic ones we just talked about a few minutes ago, and these sort of foreign policy ones. Now, some people would say, look, elections aren't usually won and lost on foreign policy issues. Some of those pulling funds or not showing up for sort of the Democrats, probably when they come down to it, wouldn't like a Trump administration more. So we'll see where especially the Muslim vote sort of shakes out on this area. I think what we'll see even more of is pivoting to the economic story, the Biden, maybe not calling it Bidenomics, but focusing on the infrastructure benefits, focusing on this sort of the sort of bread and butter issues at the doorstep. They'll continue to sort of talk about foreign policy where they need to, but I think we might see a pivot back to almost a version of it's the economy, stupid, and sort of focus on the benefits that people are sort of gleaning from this policy approach. But there's still a lot of time between now and November.
Yeah. And I mean, as you said, US elections aren't usually lost or won on foreign policy, but I think this one certainly seems to be taking a much more central sort of space on that stage, if you like, at the moment anyway, and we'll see how things unravel. There's our survey question for today. That, I mean, we just talked about this. OPEC plus will have to keep cuts in place in the second half, with the US Fed now only signaling one rate cut this year, meaning demand will perhaps not be pushed to enough with only one rate cut, etc. And what will that do to OPEC plus policy? So we'll see what we get back from that. Arne, just back to you. Let's talk a bit about China, because we talked about the US economy, we talked about oil and how it's lagging, etc. One big supporter of oil prices is Chinese demand. And that hasn't been too bad in the first quarter. Some people are a little bit more negative about the outlook for this quarter that we're in. But again, I mean, China, is a big support factor. What is the sentiment out there on how much that will play a part in the second half of the year, and even just supporting prices where they are today?
I think it's important to for the third quarter. I think it's actually a lot about US demand, because that is the driving season playing.
Right.
I think it's important role there. That is why I think also OPEC is laying the hat on when they extend the cuts into Q3. They will actually should be able to achieve a relatively tight market in Q3. But that aside, talking about China, of course, there's been an ongoing concern about especially the housing market and how that impact the propensity to spend among Chinese people, because they're basically afraid to spend their money when they're seeing the value of their apartments and houses collapsing. They have been trying to mitigate this recently. There's a program out where they apparently going to buy back some of the empty apartments. I don't know if they're just going to tear them apart or whatever's going to happen with them, but they're still there. But I guess from the Chinese point of view, the hope is that can create some kind of bottom in the housing market, and you'll be able to regain some consumer confidence on the back of.
And Arne, I mean, China is also planning to issue quite a few bonds, isn't it? In terms of trying to get the cash to sort of, I suppose, stimulate the economy.
Yeah, that's a classical fiscal spending, as you would do in an OECD country: borrow money and spend them in the economy. So they are probably doing what people have been calling for a long time. It seems like they are stepping up to the challenge now, but it's a big task for them, because the consumer confidence is really weak in China. But it's also an economy where there's actually a lot of money being earned, so people have the ability to spend, and they will of course also travel. The EV revolution is growing fast in China. It's of course also important to follow. But I think actually from a demand perspective, China is actually going to improve from here. I actually think some of the things they're doing now will have an impact. There's a big thing sort of running around in the market, that is, could China actually end up devaluating their currency? We'll have to see on that. I don't think that it's imminent, but it's also something that a lot of focus on. But the impact of that will be is unclear. And then the big elephant in the room is of course the brewing trade dispute, not only between the US and China, but also China and the EU. how will that develop? That could really derail not only demand but also investor sentiment. I think everyone is aware of this in the EU, in China, and the US, but you need to have something to stop this snowball from rolling. But I think the things they're putting in place now are actually supportive for the Chinese economy. It's a huge fiscal easing they are prepared to do, and they are targeting where it really hurts the housing market, that sort of keep a lid on everything. But the trade dispute is certainly a concern.
Yeah, that is a concern, obviously. We've certainly seen a few headlines on that from the US in the last week, on the EV tariffs, on other tariffs, on microchips, etc., and you know, pros and cons around that being debated. Yes, sir. We have a headline today on our bulletin, which is about ADNOC making its first investment in the US, which kind of surprised me. I always thought they had some kind of stake in something in America, as that was quite a surprise for me. And of course, this was on an LNG project, which is kind of interesting. Give us your take on why you think they're doing that.
Well, I mean, ADNOC, you know, like Aramco, Qatar Energy, you know, they are looking into the international LNG sector. You know, the idea here is that demand for gas and LNG is generally perceived as having much more robust growth trajectory than oil, especially given the role gas, you know, kind of play in displacing coal from power plants and power mixes and so on. So, you know, all Middle Eastern national oil companies are moving on this. And ADNOC is interestingly working on all sides of the gas equation, if you want to look at it. So they are trying to develop more LNG capacity domestically, farming into international expansions, you know, expanding their trading arms as well into this. And more importantly, which is quite interesting for both ADNOC and Aramco, they are more going into conventional gas. So just to look at Aramco, you know, they have their existing facilities at Das Island with, you know, 5.8 million tons per year of LNG. They are trying to add some 800,000 tons per year to that. You know, they aim for that by 2028, and they also have the big 9.6 million tons per year the Ruwais LNG facility. So they are looking on all of these, you know, they're working on domestic LNG, but also on how to feed more gas into this. So they are targeting 1 billion cubic feet per day of unconventional gas production by 2030. More interestingly, I think last week they awarded this unconventional drilling contract to ADNOC Drilling, and ADNOC is bringing in, I think, you know, Schlumberger and a local American unconventional shale gas driller, you know, to form a subsidiary to work on all of that unconventional. On the Saudi side, it's a very similar, you know, picture in a way. So Saudi Aramco recently completed its investment in Mid-Ocean Energy, which, you know, it marked its entry into the international LNG sector. The Saudis also have a very ambitious and conventional gas development plan, and more recently they have signaled that they might look into or consider developing domestic LNG as well, to, you know, using all of that feedstock gas.
And I mean, okay, I'd like to go to Rachel for closing comments, but just very quickly, Yasar, on the LNG front. Okay, there's our survey response. Well, overwhelmingly 90%. Okay, well, that seems to agree with current market sentiment. Just very briefly, Yasar, where does that put Qatar? Because Qatar is now third in terms of LNG exports. It's kind of slowly losing its mantle, isn't it? I mean, the US is racing ahead. Qatar is investing in new capacity, but doesn't seem to be keeping up as it was.
Well, you know, with LNG and adding capacity, well, LNG is very interesting because it's similar to oil, but different to oil as well. So first of all, Qatar is not idle. You know, when you look at the amount of capacity that Qatar is going to add, it's gigantic.
Yes.
So Qatar currently has 77 million tons per year of capacity. They are going to add 48 million tons per year, you know, through their two-stage expansion project by 2028. The other side to this is that whatever capacity they are going to build, they need to secure long-term contracts for first. So this is where competition is really strong at the moment. And Qatar is reaching out to new developing nations you know, that are converting into gas, like Bangladesh, like, you know, India is not, you know, a small country, like, you know, but, you know, India is also a big future LNG market. So they are going to these places, to Pakistan, to new places, trying to, you know, secure long-term customers. At the same time, Qatar Energy is not, as I said, is not idle. If you look, I think last week, Qatar Energy farmed into new East Med acreages with ExxonMobil in Egypt. So they are, you know, they have a very smart strategy of partnering with their existing major partners. So ExxonMobil, Total Energies. You look at their project in Iraq, you know, which is also majorly based on utilizing gas.
Well, that's good. Yeah. Well, thanks.
Yeah.
Yes, I'm going to cut you off there because we're running out of time. But that partnership angle is quite clever, as you said. Rachel, just to close off for us, I mean, Arne mentioned the US, the big question mark with China and the economy is also its trade policy and relations, and of course, US trade policy towards China, which, as I mentioned, we've seen a few developments just the last week. You know, Biden's trying to act strong on that, a bit like Trump policy towards China, which he didn't say he said he would never do. Do you see that as a permanent thing, or do you think this tariff posturing is there to stay?
I think that tariffs are bipartisan policy now. What's different? There are two things that are different. One is that the Biden ones are perhaps a little more targeted, right? The Trump ones were largely across the bow. And if anything, the Trump campaign's response when the tariffs dropped last week was, well, we would do even more. Right, we would sort of put tariffs on lots of other countries. So look, it's bipartisan within the United States now. The other thing that's different in the Trump administration, they use tariffs to try to keep goods out, and they cut taxes at home, especially for corporates. What the Biden administration has done is try to use their balance sheet differently. In some ways, we've seen countries be creative with that. Countries in the Gulf, China has been creative about using its balance sheet, as Arne mentioned. So I think we're seeing tariffs from last week in the very sectors the US is trying to build up at home. Will that be successful in actually creating competitive products, even with the tariffs? I'm not certain yet, but that's something that they're doing. And also where the allies going to be. Europe has trade disputes on EVs and on wind turbines, other things with China. I don't think the Europeans are going to be comfortable with the kind of tariffs. The other thing to watch is sort of what Arne mentioned, which is how is China going to use its fiscal space? Now, I'm less convinced that they're really doing meaningful fiscal easing. I think what they're doing is they're expanding their balance sheet to take over these items, these houses that people aren't buying, and they're just sort of moving around the liabilities. I would love to see sort of China doing consumer-oriented fiscal stimulus, rebalancing the economy. I'm just not sure we're sort of there yet. And that has an implication not only for global prices and global demand, but which sectors have that global demand. So yeah, lots to watch here. And also we'll be watching, how does China retaliate on the trade side? We've seen them already investigate type of petrochemicals, right, that is used in the US, Europe, and Japan. We've seen them sort of investigate French brandy and European wine. So I think we're in an environment where it's going to be a complicated trade environment for companies to sort of figure out and to react to. And that's going to make our job as energy analysts, I guess, even more interesting, trying to think about what underlying demand really looks like.
Yeah. Well, thanks, Rachel. No, absolutely. So yeah, absolutely. It's going to trickle through to every sector, isn't it? So hopefully some more clarity on that going forward. Rachel, thank you, and Arne and Yasar for joining us, and everyone else also this morning. And have a great day ahead. Thank you so much.
Thank you.
Thank you, Diala. Thank you, Gulf Intelligence.
Thanks very much. Bye-bye.